Welcome back to the FPAC Pro Bono YouTube channel. Today I'm speaking with Marc Lamontagne, portfolio manager and partner at Ryan Lamontagne and Sona Wealth Counsel. Marc is a certified financial planner professional, a certified investment manager designation holder, and a fellow of the Financial Planning Association of Canada. Marc is joining me to talk about retiring on a low income. Welcome to the channel, Marc.
Thank you, Mark. Glad to be here.
What are some of the challenges that low-income Canadians face when they're planning for their retirement?
Oh, that's a good question. I'd have to say it's the rules of thumb, right? So, you always read in the paper what you should do to plan for retirement, but in your individual case, especially someone on a lower income, those rules might not apply. Good example. So Mark, when you have a client come in and you say you need to save for retirement, what's the typical account you would tend to recommend?
Oftentimes it's RRSPs.
Yeah, registered retirement savings plans, because that's what we see in the news, and usually that's a better course. But if you're retiring at a lower income, you have to sort of look at the end point and say, how do different incomes interact with each other? So in certain cases, it may be better not to go to a registered retirement savings plan. It may be better to a tax-free savings account, or it might be a blend of both. The other challenge might be, or the rule of thumb has to do with when to start Canada pension and old age security. So again, Mark, do you have a rule of thumb when you see someone when they should start, that CPP?
It's a good question. I don't know if there's a rule of thumb so much, but a lot of times I do find myself encouraging people to delay taking those
Yeah,
benefits so that they can
yeah.
maximize them for the later stages of their life as they move through retirement.
Yeah, yeah. So again, somebody on a lower income may actually need that income earlier, right? So that's where sort of the interplay sort of happens.
And we touched a little bit on some of these additional income streams, but can you talk a bit more about what income streams low income Canadians can expect to receive in
Yeah.
retirement that are not tied to their own personal savings?
Yeah, so there's two big ones. There's, as we mentioned earlier, the Canada Pension Plan, CPP, or the QPP if you live in Quebec. And the second one is the Old Age Security, which we call the OAS, sometimes called the OAS pension. Now, with the OAS, it's non-contributory. So we don't put any money into it. We just qualify at age 65. You qualify for the maximum if you've lived in Canada for at least 40 years. Otherwise, there's a prorated amount. Now, there's a couple nice features about the OAS, and one of them is that it get indexed on a quarterly basis, as opposed to, other stuff tends to be annual. And do you know the reason why it's indexed quarterly, Mark?
I've never actually figured out why or even asked why. So I'm interested in the answer.
Well, it's because when they came out with the program, there was very high inflation.
Mm.
So to compensate people to adjust for the inflation, they made it on a quarterly basis. So when inflation was low, it really doesn't make any difference. But in 2022, when inflation was high, it actually kind of helped.
Mhm.
And the second nice thing about it is you get a bit of a boost when you turn 75. So there's a jump of about 70, $80 at that point, and that's a new feature. Now, the second one, as I mentioned, is the Canada pension. And Mark, if you wanted to know how much you're going to get from CPP, by the way, do you know how much you're getting for CPP when you retire?
So the last time that I looked at my
Yeah.
statement of contributions and my estimates online, it shows that I'm projecting near the top end of the range. But of course,
Yeah.
I won't know until I get close to that date, and who knows what the future holds, right?
Exactly. So that's an important point. So most people, aren't really sure. They're doing the back of the napkin calculation. So you actually can get a statement. Now, they used to mail you a statement, but they don't do that anymore. So you need to go online and get an online account from Service Canada. Now, it's just like Canada Revenue is very similar, but it's a separate login. When you go to Service Canada, you apply for the login code,
Mhm.
and on there, they'll show you all your contributions since the age of 18, and they'll give you an estimate. So, it's a pretty straightforward process. Now, it's not perfect because there are, as you know, there's some dropout provisions where, if you were home looking after children under the age of 7, that they don't penalize those years and things like that. But I think it's a pretty good start.
For sure.
Yeah.
And are there any additional programs beyond Canada Pension Plan and Old Age Security that maybe some low-income Canadians might expect in retirement?
As far as programs, there's a lot of little provincial and federal support, but the big one is the federal guaranteed income supplement, sometimes called the GIS. Now, the way you qualify is based on your income, but there's also other factors that'll come into play. The general rule is if you're retiring and you're single and you're making less than 20,000 a year, then you're going to qualify for something. It brings up an interesting point, Mark, that one of the things that you should be also doing when you're planning for retirement is you do need to do a little bit of income tax planning.
Mhm.
So that you'll know how all these incomes will sort of fit. And it's not just how much income I'm going to get, but it's how much income I'm going to keep, right?
Mhm.
So, a couple quick examples. Everybody gets a personal credit of about $15,000, which essentially means the first 15,000 that you make, you pay no taxes.
Mhm. Mhm.
But once you turn 65, you might qualify for an age credit. Again, it's income tested, but could be as high as 8,400.
Mhm.
If you have pension income or RIF income after 65, then you get a pension credit. So again, these things can certainly add up and end up saving you a lot of money.
That's awesome.
Yeah,
And it does add up. And when you kind of factor and start stacking some of these programs onto each other, like it starts off, a few $100s here and there, but it can add up to, quite a number, especially for somebody who's, they're really stretching to make that dollar go as far as they can, right?
absolutely.
Are there any other strategies or things that you can think about for people who are currently in a low income situation, but they're thinking about also retirement?
Yeah, there's a couple, Mark. One is be sure to file your tax returns. Now, there's no requirement to file a tax returns if you don't owe any money, right? So what I find is sometimes people just won't bother because it's not to their benefit. But they should be filing because often they're eligible for, refundable credits, and CRA will keep the records up to date and see what they qualify for. So, I think that's an important thing they should be looking after. And then, of course, they should be speaking to a certified financial planner to help them make those decisions. And if they don't have access or can't afford a financial planner, of course, they can reach a pro bono financial planner at the Financial Planning Association of Canada.
Mhm.
And it's just a one-off meeting, typically 30 to 45 minutes, but there's no cost, and it's certainly beneficial and help you get started.
Thanks for doing this, Mark. I appreciate your time today.
Thank
And
you,
if
Mark.
you like this video, make sure to give it a thumbs up and subscribe to the channel. There's going to be information in the description section below that'll help you get in touch with the FPAC Pro Bono Committee. Thanks again for joining us today, Mark.
Thank you, Mark.
And thanks for watching this video, and we'll speak with you soon. Take care.